And that sound means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We've got Mark, Matt, and Tim here for your daily dose of analysis in the stock market and everything that's going out there in financial markets. Matt, how you doing today?
I'm doing fantastic.
Are you, Mark? Are you fantastic?
You know, I'm not doing too shabby today after continuing to get feedback. Because the one thing you worry about, like when you interact with the community, and that's what Tackle Trading is a community, is, you know, how are they doing in the midst of all this chaos? And the more and more feedback I get on how individuals have applied what they've learned over the last 8 trading days, it actually has me having a little pep in my step.
Oh, no, I'm very proud of the messaging and the teaching and the community that we've created here at Tackle Trading, because it's helping people if they're listening. There's no question about it. And that's why our crew shows up each and every day to get it down. I got to acknowledge the dove here, though, Matt, because I had this thought, and we were talking about it. Explain this.
We need a bat signal,
right?
For all the central bankers come together to save humanity against a virus. We need a bat signal. I don't know what that is, but Cody found this sign, and this is the bat signal for when the central banks are going to cure a virus and give a lot of confidence to the investor community. And I just want to tell Jay Powell something. Jay Powell, nothing in the market gives the investor class greater confidence than an emergency 0.5 basis point cut in the Fed fund futures rate. Nothing gives us greater confidence. And I had to laugh today. I mean, every time the Fed does this, I've said it before and I'll say it again. The Fed is a bunch of bad parents, not disciplining a bunch of children who have never truly seen market volatility. And anytime Wall Street throws a little bit of a temper tantrum, the Fed comes in to save the day. And it's just, my conservative, Adam Smith capitalist heart just dies a little bit every time the Fed does this. But I'll tell you, when I saw the G7 call an emergency conference call, that they're gonna, do whatever they can to sustain growth, and Jay Powell comes out and announces an emergency 0.5% basis point cut, and the Royal Bank of Australia cuts to the lowest record number that the Bank of Australia has ever had at 0.5%. And Malaysia comes out and they cut again. But yet Jay Powell has the gall to say in his press conference today, the U.S. economy is fundamentally strong, but we need to give a 0.5 basis point cut.
Not even a 0.25, 0.5.
It was 0.5.
0.5, just
0.5.
We have a strong economy, but we're cutting rates.
Yeah.
What?
Everything is amazing. Everything is amazing. Everything is strong. Unemployment is 3.6%. Inflation is rocking at 2%. Markets are still only 8% off the all-time highs. And here's the Fed coming to the rescue. I'll tell you right now, I have less confidence in the United States economy and in the fundamental value of our stock market now that the Fed had to do this.
You remember the day,
a positive sign to the marketplace.
This
Matt, Tim, before you go on, Matt, do you think that this potentially is causing the opposite reaction in which they want? Yes. Where such a panic move is telling that the risk to the economy is even bigger than currently anticipated? Because it was only a few days ago that these same individuals were saying, hey, economy's strong. We'll monitor the situation. And then a few days later, does the risk of all of these banks and all these governments, are they adding to a panic potentially?
Yes. Fundamentally, yes, 100%. They are adding to the problem. They are not fixing the problem. If the U.S. economy was truly strong, like they say it is, and if our GDP numbers are where they say they are and where inflation is where they say that it is, then they wouldn't need to cut. But I'm going to tell you right now, I said it last Monday, the most important economic report we're going to get is on Friday night, and the Chinese PMI numbers put the fear of you know what into the central bankers around the world. And it was those PMI numbers that forced the Fed to respond. It had nothing to do with the coronavirus, in my opinion. Well, obviously the PMI numbers have everything to do with the coronavirus, but I don't believe it's the coronavirus spooking the U.S. consumer base. I think it was that PMI number on Friday that really kind of led to this.
You know, it reminds me, guys, of December 24th, 2018, when Mnuchin accidentally talked about how the banks had an emergency conference call and the market completely spooked out and actually sold off 4% that day. I'm not saying that's going to happen here today, but when you come out and you tell the market that you're doing something radical and in an emergency way, I'm with you 100%. I don't think this is going to be well received.
You want to know how
the
I
question
know
that everybody has is why?
Yeah.
You want to know how I know that no general euphoria was created by this? And it has to do with technical analysis. You came up to falling nines.
I was going to bring up your girlfriend. I saw
My
it.
favorite girl, my indicator, the one I've done more study on than anyone else. And what happens when you come up to a falling nine is that if you get slapped down immediately, that lets you know that algos were immediately able to reverse course, and that there's no real euphoria. It came up to those falling nines and just immediately got slapped, like without hesitation. It got slapped down, which from my study indicates there's no general euphoria. There's no real sentiment. That algos were immediately able to slap down off that, and price just capitulated immediately.
You know,
last time the Fed had an emergency rate cut was in October of 2008, guys.
Yeah. Yeah. By the way, it's not just the Fed here today, Matt. It happened in Malaysia. The Royal Bank of Australia, the Bank of Japan reiterated yesterday they will do something if needed. So did the ECB. Global banking systems are all kind of in concert here that they're willing to step in and do something to either lower rates or to address the problem. And then the G7 statement came out, and the market is not responding to any of this right now.
Well, because the G7 didn't specifically say anything. And again, that's one of the reasons that caused a little bit of concern here is that you have this emergency conference call between the G7 leaders, which is a weakening organization over the last 5 years of internal dispute. But you have a G7 meeting, and they come out there in this emergency meeting, and yet the only thing they say is the exact same thing that they've said before, that we are ready to act. But there was no specific actions they were going to take. And they said, we're not going to do a global coordinated effort, but yet literally right after that, Australia, Malaysia, the US, they're all going to cut rates. Guys, in this environment, I'm going to tell you right now, this is my opinion, but I believe we're staring at zero interest rates within the next year to 2 years from now. And honest to God, I'm dead serious. I'm not saying this with hyperbole. At what point does the Fed just start going all Bank of Japan and buying S&P 500 futures?
Dude, at this rate, we're going to be there by Thursday.
Yeah. Well, and that's the thing about this emergency cut, guys. I really do believe they have contingency plans to go further and well beyond interest rate policy or monetary policy into fiscal policy. And maybe we'll call it equity policy, Matt, because they might just directly start buying. Yeah.
As a mainstream American consumer, I just want to say congratulations to Wall Street. Congratulations to corporations. Congratulations to the top 1% of the market. Congratulations on the continuation of your corporate socialism. I don't understand why the American consumer base allows this to happen. I don't understand how we don't vote out anybody in office that supports these types of policies. It's absolutely, our economic philosophy today is fundamentally broken, in my opinion. And the Fed is responsible.
Yeah, no, I agree with that 100%, which I guess it brings it back into some political discussion. Super Tuesday here, Matt. I mean,
you're low, T.
I just brought it down a little bit, but Super Tuesday here, Matt. Do you think this actually has an effect on politics? Do you think the average American cares that interest rates?
Well, I think there's a reason Bernie Sanders gets the support he does, Tim. Even though I fundamentally disagree with his answer to the problem, he has identified the problem. Yeah. And I think a lot of people are waking up to the problem. Now, again, I disagree with his answer. I think getting back
if I have two brothers support Bernie Sanders, I'm changing my last name. I'm changing. I'm going to be Mark Mulvaney.
I'll tell you, I disagree with Bernie, but I think Bernie comes from a good spot. He's very consistent. I disagree with his solutions to the problem, but I do understand why there's a strong following amongst, 18 to 35-year-olds about who support him.
Yeah.
I understand
You mean the ones that don't understand socialism?
Oh yes, I didn't want to say that.
The young people who never, lived through or actually witnessed what socialist
is not the
regimes
answer,
end up
but
becoming.
honestly, Cody, neither is corporate socialism. Okay,
Mhm.
neither is
I agree with that.
socialism. We got to get back to who we are as capitalists. That's the answer.
I
agree.
It's going to be an interesting
Go
season
small
here.
government, not big government.
I mean, here's the thing, though, guys. I mean, with that, 50% of the American public does not own any stocks or have investments in the stock market. So this idea that you're cutting rates to fix the Dow when you've got a spreading pandemic, I don't think it's going to go over well with some people.
And this is the thing about the pandemic. Let me give you the headlines, because once again, what the market really wants to know is when the coronavirus is going to go away. Everything the Fed does, everything the government does, everything the IMF does, everything the G7 does is going to be an attempt to prop up the stock market.
Yeah.
But what the market really wants to know is it's going to go away. Headlines today: Iran is just a terrible mess. 8% of the parliament has tested positive for the coronavirus. Cases are estimated to be who knows where. South Korea passed 5,000. U.S. now has 6 deaths. A New York high school closed over a suspected case of the coronavirus. Washington State is in a state of an emergency. The Pope did test negative for the coronavirus because there was some speculation. What?
I said that's good. There was some.
There was some speculation, right?
Yeah.
A New York high school student did, I think, son of they closed. So there was a case of a high school student. It's one thing.
Atlanta got their first 2 cases as well.
Second case confirmed in Manhattan. And of course, the CDC now has taken down, so we can't even tell how many people have been tested.
That to me is an underreported headline when the CDC does not even release testing, because the number one criticism of the government's response to the coronavirus so far has been testing.
Mhm.
Testing has not been where it is.
Oh, I would say clarity.
7
They
days
need to be
ago?
more clear about what they're doing.
Yeah.
Clarity to the
Transparency.
public needs to be transparency. Yeah.
Yep.
People need to understand, like, even if they don't necessarily understand all the aspects, but you need to make sure you give a little bit more detail as to what the plan is.
Let's learn a lesson from China. China in the early days, back in early January, was doing everything they could to suppress the information. They were doing everything they could to make this not a panic. They were doing everything they could to keep societal order. You know what was the trigger? People were starting to die and fall over in the streets.
Mm-hmm.
Yeah.
And when that was happening on such a mass scale, people lost all trust that you could trust anything from the government, because they could see with their own eyes people dying.
Mm-hmm.
And so what happened? China reversed policy. It says, okay, we're going to get this out there. And they tried to control it a little bit and underreport the cases. But their early stages was, nope, nothing to see here. We're going to contain. Yeah. You want everybody to lose faith in the government, in anything, underreport the numbers, underreport the facts. China tried, and people just completely said,
well, and we were heavily criticized. There was heavy criticism of China and their data, and there should be heavy criticism of the US and their data as well. Transparency is so important here. But the one thing I'll say about the central bank cutting interest rates as much as they did, guys, what they say about the US economy is false.
Mm-hmm.
They know it. They know it. The government knows it. And what we said about the coronavirus having the ability to spark this next recession, the Fed is staring down the barrel of that, or they would not have cut.
And that's the problem.
The truth of the market is this: we're staring at a recession. That is the truth of the market. Now, the only question I have is, do we just stop growing? Do we go through stagnation, or do we go through a recession? But we're going to see a downturn in the economy. We just don't know how much, because Mark, you can't fix the supply problem overnight. You can't fix the supply problem with interest rate cuts, and you can't cure a virus with monetary policy.
It is unnerving right now, guys.
I read, here's a quote I read. Like, all I do is read. Like, seriously, for the last 7 days, all I do is read and try to make the best things. Here was an interesting quote. I don't have the author's attribution. I apologize for that. Markets are said to stop panicking when policymakers begin to panic. That's generally as a general rule, right? Markets stop panicking for 12 years. The Fed just delivered an emergency cut, which qualifies as a panic. So in the historical model, that's correct, right? Like,
yes,
policymakers panic, markets get calm. But the Fed's tools are imperfect and not adequate to deal with a public health crisis. The markets, what they really want to know is how far the virus will spread, and the Fed cannot answer that question.
And the biggest problem is I don't think anybody can answer that question. There's too many unknown variables there.
The head of the World Health Organization says, I don't know.
Well, the head of the World Health Organization said we're staring at one of the worst situations we've ever been faced with.
Yeah.
He said that today.
Then why, not, you and I and Tim and people that follow the markets, none of us believe the Fed anyways. But why are they risking total societal rejection of institutions by saying stuff?
They are so scared about Wall Street selling.
Because Powell today,
so
what was
scared.
one of the comments from Powell today said, this rate cut will provide a meaningful boost to the economy. Will help Powell said the benchmark rate will help the U.S. economy stay strong.
Do you think the Fed is leading here, though, guys? Couldn't they just be following?
Mark, he literally stated that one of the reasons they cut was because of seeing weakness in certain sectors. And he said the airline industry. I would like to know how in the world a rate cut is going to force consumers to fly more.
It's not, obviously. And, these people, what's funny is sometimes they get made fun of for living in ivory towers or being I think what's happening right now illustrates how completely out of touch these academics are. They only converse with one another. They base on their own theoretical models. They don't talk to average human beings. They don't have any interaction with anybody but their upper elite circle. And this is becoming transparently painful that these federal policy makers, the Fed, the Jerome Powell, the Janet Yellens, how ludicrously stupid and out of touch they are with common sense and everyday American interactions with one another.
I agree 100%, Mark. I've said this before. The Fed is full of a bunch of highly educated, highly intelligent individuals who craft these monetary policies and economic models in a laboratory somewhere. But what they fail to understand is just basic human beings. They do not understand basic human beings because they are completely out of touch with Main Street America. Completely out of touch with Main Street America.
And this segment is brought to you by the Bernie Sanders Super Tuesday campaign. Feel the burn.
Actually, Matt will be triggered by that. He's very much a moderate. So
I am very much a moderate.
I'm rooting for Joe Biden today. I'll go on record and say that. I'm rooting for Joe Biden.
I'm voting for Joe Biden.
Do you think the market's going to care about this Super Tuesday tomorrow?
People
I think
dying.
you'll see some headlines, but no.
Yeah,
Nobody
I don't think
cares.
so.
Like they haven't. Listen, this is.
I can't wait for the headline real quick, Mark. I can't wait for the headline tomorrow because Sanders should get the most delegates today,
and
right?
if the market goes down tomorrow?
Okay. And the market goes down tomorrow, and I can't wait for the headline that says market goes down on Bernie's presidential hopes, and it will have nothing to do.
I think even market headlines like I don't even know if anyone actually believes that anymore.
No.
There probably are. 38% of Americans are not drinking the Corona beer because they think they'll get the coronavirus. I've now lost complete faith in your average human being, after that headline. I cannot get that headline out of my head.
Yeah.
So.
Well, I still have faith in people, and whether or not it's all of them
You're
or
an
not,
idiot.
it is what it is. I'm going to be a pillar of positivity here. Let's break these markets down a little bit more here, guys, and talk technically. Dow, S&P, NASDAQ, Russell, they all look the same, Matt, but give me the NASDAQ once you go through the intraday on the Dow, on the ES here, because the NASDAQ smacked 9,000 even. Break this one down if you can.
Yeah, the amazing thing is in the last week, we've had 4,000 point movements in the market, 3 down and 1 up. Yesterday, it was fascinating to watch the market the last hour yesterday. Like we were recording the podcast and I was just staring at the market going, oh my God, have you guys seen this? Have you guys seen this? It went up 50 points without even a thought, right? And I love the headlines. Investors celebrate, the market. I'm like, that was all algorithms. But, we do have a tendency to blame algorithms on the way down and we don't give them credit on the way up. But what has happened here is it's created massive trading ranges here. What you're seeing today is a very volatile day, even though on the chart, it doesn't really kind of look that way.
You know, guys, what you have there is the first prolonged intraday range that has developed since the coronavirus broke. You know, you look at that trading range that's developed over the last, you know, what is that? You know, 15, 16 hours of trading.
Yeah, it's from yesterday's close.
Yeah, I mean, that is the first like consolidation range we have seen.
Well, and it's setting up for a potential day trading situation where you have, you know, I would say a tight range. You have a very expanded range here, but you do have some consolidation between 3050 and 3100 here. And as you can see, every time it kind of comes down to that 3050 range, markets start buying up. A
500 point
31. It's really,
it's funny. It's like you finally get a tight range and it's 500 points.
That range is like 2%.
I know, that's crazy. But we saw that we've seen those type of things develop before, like in the tweet range of 2018. Like these ranges can be massive, but they're still ranges.
Well, and on the intraday there, some of those range levels are going to be where those next catalysts are. I mean, 3,000 on the S&P, Matt, if that broke down on the intraday, that's a pretty clear bear signal that we're going to go back down and test the
honestly, guys. And I know sometimes when we go through these types of things, it always sparks that historical thought process, right? It really does remind me of the debt crisis, the European debt crisis in 2011. When basically Greece came out in June, July of that year. Basically, they were going to default on their debt. And it really kind of showed how much debt the Eurozone really had. And once that kind of sparked, you see all this just massive movements to the downside. The Fed starts further quantitative easing here. They didn't lower the interest rate because they already had zero interest rate policy, but they further injected quantitative easing. And you created these massive volatile ranges in the market that lasted a good couple months. And that's really kind of what it reminds me of, is you're having these massive ranges in the market right now. And and we're just kind of starting to see this kind of form. But coming back to the intraday ranges here, you do have that overhead resistance right there at 3,100. You have a pretty important support level right here at 3050. Obviously, we're starting to break down out of that 3050. And if we break down, by the time we get done talking, guys, it could be at 3,000. I mean, that's how volatile this situation is. When you're looking at the Dow Jones, you're seeing a little bit of the same type of situation. Obviously, we're starting to break down out of that range as well. When you're looking, not natural gas, although natural gas has had a nice little couple days here. But when you're looking at the NASDAQ, the NQ contract, you're seeing that same type of market volatility, really kind of stuck in a range between 8,900 and really 8,700 here. So, you know, the market is in a precipitous moment here. And I said last week, and I can't remember what day I said, but the next 24 hours are going to be very, very important for the market. And I'm going to say the same thing about this marketplace, because if the market sells today in the face of an emergency rate cut, in the face of what the G7 did, and the market doesn't buy it, what's the Fed's next move, guys?
More rate cuts, probably.
Here's the thing, Matt, like,
yeah.
I like, even as we're doing this, like just continuing to read different sources, and there's lots of like chatter speculation that the reason today's sell-off, as far as like not building up sentiment, is everybody is screaming for more fiscal stimulus.
Well, I get that. But again, I come back to the analogy of if the Fed's mom and dad, right, and they had a child, and for the first 12 years of this child's life, the parents never disciplined the child. And then all of a sudden at the age of 12, they tried to discipline the child. It's not going to work. You have an entire generation of money managers on Wall Street who have never seen true market volatility, who have never seen the 87 crisis, who never saw the dot-com crisis, who never saw the subprime meltdown, and who only know one direction in the market, and that's buy, 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 buy. So in the face of anything negative, they are immediately just go into sell mode because they've never truly handled anything besides price appreciation. And so when the Fed, and then when Wall Street throws their little temper tantrum, the Fed comes in and says, "Oh, it's okay, it's okay. It was Susie's fault." I mean, it's absolutely insane. I mean, just last week, Mark, the Fed was talking about how they were not ready to act, and there was a ton of chatter about how the Fed wanted to wean the market off the nipple of Fed monetary policy. And just 4 days later, we have an emergency rate cut. The Fed has lost all credibility, 100%, all credibility, in my opinion.
Yeah. Yeah. And by the way, the dollar is still in free fall mode, in my opinion. We've had now about 7-8 candles in a row.
You know what's not in free fall?
Gold.
What I said yesterday, everybody needs to own gold, especially if we're going to start going to zero interest rate policy.
And that's been our message on gold, Matt, right? For the last few days during the short-term sell-off, because anything can cause a 1-2 day sell-off, right? It doesn't change anything. And like, how excited were we yesterday when we were talking gold on the sell-off? It's like, like this, I mean, you got to understand the fundamentals of what are driving gold, and obviously they're amazing.
The fundamentals of what is going to be driving gold for the next 2 years is every central bank around the world losing their damn mind, and every government offering fiscal stimulus is just to keep an economy from stagnating.
That candle's brought back all of the losses you had on Friday from that selling, Matt. And obviously it goes back up.
Those money managers liquidated their gold positions to pay down their margin calls.
They probably had to. I mean, it was not. It may not have been a choice, obviously, and some of those.
I just feel it's so full. Let me liquidate a positive position to pay down a negative situation. It literally is what General Electric was doing last year. But then again, General Electric's up like 80% since then.
Well, and that's the risk of leverage, right? I mean, you're assuming that that margin's going to stay the same, but then you start losing, margin expands, brokers start making those calls.
I thought we fixed these margin problems in 07, 08, 09.
Nope.
I thought that's what we were supposed to do, is make sure the hedge funds didn't over leverage themselves 30-1 by borrowing money at zero interest rate policies and just dumping it into the stock market. And then when anything goes bad, they get margin calls and the Fed has to come and bail them out through repo actions. I thought that was cured 10 years ago, but apparently
we cured it by buying out the banks. That's,
again,
don't punish someone for doing something bad. And hey, you did something wrong, but you know what? You should go out. You should go with your friends this weekend.
How did buying Sallie Mae and Freddie Mac work out for the American consumer, socialist?
Not great.
Not great, because socialism doesn't work.
Matt, run me through crude oil, gold. Let's take a look at some of the commodity charts and on the dollar.
Let's take a look at the dollar index, just
and the dollar
on the chin here. Obviously, when you lower interest rate policies, the intention is to increase the money supply rate, right? And anytime you increase anything from a supply perspective, valuations come down. And when the central bank comes out with this emergency rate cut, oh my God, I just, every time I think about it, I just get a little bit more ill.
You throw up a little bit in your mouth when you say it.
like seriously, Jay Pal, you're such a joke. But in terms of this, anytime you're going to increase the money supply, boom, 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 it's going to obviously lower the currency. And guys, we started another currency war in 07, 09. This is going to be a big currency war over the course of the next 2 years as every central bank tries to compete with one another. And that's not a positive thing. And the last thing I'll say, and then I'll get off my soapbox, is what the Fed has done in the last 10 years is criminal. It is absolutely fundamental criminal to an entire generation who was taught how to save their money to prepare for retirement. And the baby boomers did that. And they were planning on offsetting inflation with a higher interest rate. And yet they have destroyed an entire generation of savers out there. They've destroyed the saving mentality. It makes no sense to save any money. You have to get it working.
Yeah. I don't know where the bottom on the dollar is here because so much of this is unprecedented, Matt. I mean, if they continue to just keep pushing money into the middle and just lowering interest rates over time.
Yeah, that's the thing.
Just wait till Europe does what they do and wait till Gerardo from the Bank of Japan starts buying even more ETFs. Just wait. It'll happen. It'll put a bottom in the dollar.
It's got some floors down here. It might hold on.
But that's also one of the reasons why Forex is kind of a broken trading vehicle from a swing trading perspective.
This is like, Matt, I was thinking about this the other day, and it's a subject for a future podcast. Don't you have to treat currency in today's monetary environment like you do commodities? To buy cyclical lows, sell cyclical highs, because other monetary banks are just around the corner with their own version?
Guys, yes, I think there's some analysis. Now I'd have to go dig into some research there, but I mean, when currency wars happen, it's everybody's trying to compete for the bottom, right? Yeah. And when shots are fired and the central bank has an emergency rate cut, Europe's going to respond. Australia has already responded. These things are going to happen. And when we went to zero interest rate policy in 08, Well, what that force every other central bank around the world to do? Come to zero interest rate policies. In fact, go to a negative interest rate policy, because there's a competition to a certain degree from an exporting perspective, from an economic perspective as well. So is the currency market going to behave like the commodity market? Maybe, maybe not. But I have much greater confidence in buying commodities at a low point than I do currencies at a low point.
Cody, what's the rate on the carry now? I mean, if the Fed just cut, Japan is at negative 0.1.
It's less than 1%.
Got to be about 0.9, something like that.
Well, the carry is the difference between the two interest rate policies, right?
Yeah.
So if the Bank of Japan has a negative 1% interest rate, the U.S. has a positive 1% interest rate, that's you're carrying a positive 2% interest rate, but that's not exactly how it works. You carry like literally less than half of that. So to me, the carry trade, which was the number one trade around the world for many, many, many years, that trade's broken. You can't carry the risk of a devaluation currency just to offset it through a 1% interest rate. You're not even offsetting inflation at that point. You might as well just buy a bond at 1%.
Yeah, obviously, the lower these rates go, the less attractive the carry is, the less attractive holding the dollar is. I know support is down there, guys. I never want to, say support won't hold till it doesn't. And Mark, you might be right, but I got to wrap my head around what your question was. It was a really good question. Can you buy at these cyclical lows? I wouldn't touch this one here in any short-term order with what the Fed is doing, Matt. It's a stay away from me, no doubt about it. Crude oil, by the way, is coming back up just like the market did, and now we are. Got a little doji as well, kind of hitting that 9, falling EMA, guys.
Kiss the 9.
You might not get your $50, guys. I mean,
you guys actually just
I need it though.
You guys missed the actual what really just happened there. I expressed interest in a Forex chart for the first time ever on the halftime report.
I was shocked, actually. I don't know how to think about it.
Yeah.
Because I really do. I mean, you think about it. Anyways, I'm going to develop this theory, but I'm actually interested in Forex for the first time in a long, long, long time. So
come check out the Forex.
What else am I going to mock then? What am I? I need 2 minutes.
Cody's Forex report.
No, I need 2 minutes in the halftime report where I can text the woman I'm dating in the halftime. So I need to, if it's not Forex, it's got to be something else now.
You're literally texting your Tinder date during our halftime show.
Okay, it's not Tinder.
All right. I'm just saying.
The man's got a crush.
I get it. I get it.
Mark, what's his name?
Man's got a crush. That's all I'm going to say.
Yeah. He's got about 10 crushes, actually.
No, that's not true.
No.
You're out of the loop. I don't know. I don't know where you've been.
I was traveling last week. I don't know. I don't get the updates on your dating life every day. I might have to.
Mark's dating life is like a swing trade.
Yeah.
You got to be present.
Matt, are you going to wait for $50 here on crude oil, or is this tradable actually?
I don't trade one-day retracements. Yeah. So I would have to see it. I mean, I can see an aggressive trader kissing off the 9. Putting an order in underneath the low of crude oil. But no, I honestly, guys, I want to wait to see what OPEC says on Thursday and Friday. I don't think we should, do anything aggressive in the oil market, when, ExxonMobil and Chevron have investor conference days over the next 2 days. And obviously those investors have been very, very, very upset over the last few years as ExxonMobil has really, really struggled in an ever-changing condition. And, it reminds me of these energy companies like Exxon and like Chevron, Schlumberger, Transocean, these drill baby drillers. It reminds me of companies, brick and mortar retail companies, who failed to evolve to the ever-changing consumer behaviors from an online model perspective. And those companies that failed to evolve from an online model perspective, those companies have underperformed the market, or they've been out of the market over the last 20 years. And every research paper out there, every hedge fund out there, even OPEC themselves has stated that our consumer behavior from an energy perspective is changing, and that we're going to be less reliant on energy products, crude oil products, fossil fuel products in the next 10 to 20 years than we have in the previous 10 to 20 years. And so it's going to be very important to see what ExxonMobil has to say, what Chevron has to say at those investor conferences, because are they going to pivot to clean tech? Right. I've long held the view that clean tech, the revolution of clean tech will be led by energy companies like ExxonMobil, like Chevron, who, will see the ever-changing condition, and they will modify their business models, their business model approach to fit that ever-changing condition. And they have not done that yet, even in the face of what Larry Fink said last month, where even BlackRock is going to be, getting out of the fossil fuel type industries, those types of stocks, and they're going to look at clean energy companies. So it's going to be interesting to see what ExxonMobil has to say about that, what Chevron has to say about that. And then obviously in 2 days from now, OPEC is going to meet in Vienna, and they're obviously going to discuss, we just cut everything, rate cuts, cuts on oil
supply
production.
cuts. Yeah.
We just cut everything. But it's going to be interesting to see that. So there's a lot of news over the next 3 days that I think we just need to be a little cautious in the energy space. And I think we need to be a little cautious in the oil space as well.
Speaking of cutting everything, so our company's cutting guidance, Matt. So it is across the board, not just rate cuts and supply cuts at OPEC. Visa cut their guidance. I think MCHP's, QRVO. We're starting to see this come out of companies regularly where they're cutting revenue guidance, future expectations for 2020, citing coronavirus, kind of impact. There's no doubt about it. Earnings season for Q2 is not for some time, about a month now. But man, I cannot even wrap my head around what to expect. Quite frankly, guys,
you can expect a shocking next earnings quarter. Mm-hmm. A shocking next. In fact, the next two. That's where we're really going to see what's happening. We're going to see it through economic reports, and we're going to see it through companies' revenues and earnings per shares in the next earnings season. And Visa was just the latest, Tim. You had 4 or 5 companies today, all basically say, "Hey, listen, we're not going to do as good as we thought we were going to do." And another company, Hyatt, the hotel company, they withdrew their guidance completely, 100%. They said there's too many variables here, and I agree with it. There are way too many variables in projecting where these companies' guidances are going to be in a year from now.
Yeah, it's really hard to identify that. And by the way, in the field of trends, obviously there's a lot of companies when it comes to spending, consumerism, travel, tourism, they're the ones being hit negatively. A couple that are affected positively here today, Matt, the home builders.
Again, rate cuts won't make me go on a vacation.
But you might refinance your house, and you might be more likely to actually.
And that's a great point, Tim. I mean, that's one industry that will benefit quite dramatically, in my opinion, off interest rate decreases is the home builders out there. Mm-hmm. Toll Brothers, KB Homes, Pulte Group, Lennar, DH Horton, those 5 home builder companies, they should benefit a little bit, but obviously, technically they're all kind of sitting at that 200-day moving average, little concern about.
But also, I think that's way ahead of the game because, I mean, if you have economic disruption, they actually stand to get hurt pretty bad.
Oh, home builders will be hurting that.
So, I mean, here's the thing. We live in a day and an age in the last 7 days, which seems like forever now. Old models do not apply. Normally, an interest rate cut, you get a nice bullish rally on homes, right? Mm-hmm. Always happens. I think old models in which you base decisions on are not applicable here because we do not have the breadth of the coronavirus. I mean, this is.
I agree, but we also don't know the depth that it's really going to impact the U.S. consumer. Okay, if the U.S. consumer has a job, regardless of what anything economically happening in Europe or China or Japan or Australia, or New Zealand or anywhere around the world, if the U.S. consumer has a job, you said it yesterday, Mark. If they see their neighbor get laid off, it's a recession. If they get laid off, it's a depression. But if they don't, if the labor market maintains it, 3 to 4%, people are going to refinance their homes. They just are.
Mm-hmm. Yeah. And obviously, I mean, mortgage rates, watching that over time, it should come back down. It's actually not going down today, but they don't usually react on those one-day moves. Fed just cut rates 2 hours ago. So we'll see how that plays itself out. Newmont Mining, a Tackle 25 stock, obviously the move at gold, the move into safety, Matt. What a beautiful looking candle there today. I don't know if there's any entry point besides maybe an kind of just.
No, but if you're in it and it's a trade for you, I think sometimes, even though you got a really strong candle and the probability is we will see a break out of that 5134 handle, at a minimum, you need to start adjusting stop losses, in my opinion. I mean, when you're up 8% on a day and you're in a trade, regardless of the situation, I think you maybe scale out a little bit, lock in a little bit of that profit, scale up that stop loss. Obviously you don't want to keep the stop loss underneath the low of the day. You'd have to kind of break this down from an intraday perspective and, pick your poison here, maybe underneath $50. That's a significant whole number, under $50. If it stays above 50, you keep the position on. If it comes back under 50, you pull the position off. That helped you, Mohammed.
More companies I want to talk about here. Tesla actually had an upgrade. They very interesting, upgraded at JMP Capital, obviously to an outperform target price up in the $1,050 level. Matt, gap out, not holding, red candle, not a great candle in the short term. This is a hard company to really predict here. Obviously, the hottest company in the market for months. What's your read here on Tesla, Matt?
Oh, just another bank trying to catch up with the price. Can't remember what bank it was. So
JMP.
JMP it was. Upgrade. They not only got a price upgrade, they got a legit upgrade, Tim, to an overweight. And I believe their price target, they just make up price targets on Tesla. Like literally just pull them out, just make them up, but it's 1,060. So they got.
Well, let's play a little role play here. Your job, you're an analyst for Tesla. Okay. You've got to come up with some price target on a company that doesn't have actual revenues that justify it. So where would you target?
In the face of a potential recession? Not 1,000.
$400.
300.
You're gonna be underweight, right?
200. 100. Who buys a Tesla in a recession?
It is comical, but I don't know what you would do if that was your job. I mean, if you were given the job to be an analyst for Tesla, Mark, where would you?
Listen, if you kept Tesla's price target at a bank at 400, when it's currently
anybody that follows
not an analyst at that bank any longer.
Yeah.
Anyone that follows analyst ratings realize that it's a comical, like just ignore them.
Yeah.
Oh yeah. What was it in the tech bubble, guys? They kept 90% of the tech companies as a buy or a hold rating all the way through the crash when it dropped 90%.
Despite 90% depreciation of price.
Yeah. These people are not the best and brightest of society doing this.
Again, the reason Tesla was skyrocketing is a lot of these Asian economic systems were literally over the next 5 to 10 years planning on going clean tech, and obviously, and it was led kind of by Singapore. So, you know, if the coronavirus is one of those situations that, you know, we look back in a year and we're just like, hey, that was scary, but it wasn't as bad as it could have been. You know, Tesla's going to maintain in those environments.
Yeah. Another company I want to talk about is Amazon. Actually, they just announced that in 5 cities or 4, Phoenix, Philadelphia, Dallas, and Orlando, they're putting locations so that they can do shipping within 5 hours. And Amazon obviously is going to continue to making this move.
Same day shipping over the last few years. It's like, it constantly reminds me of that epic scene in Something About Mary, where it's 8-minute apps. No, 7-minute apps. And I think we Googled it one time, and I think, Cody, we got down to like 15-second apps.
30-second apps, something like that, yeah.
15-second apps.
Something like that. And so this competition that Walmart targets, these big box retailers like Walmart, the competition of them going, you know, 2-day shipping, 1-day shipping, 5-hour shipping, you know, it's fascinating. It's fascinating. I still maintain that Walmart's in the best position, especially if they truly do launch that. I forget what it's called, but the direct competitor to Amazon. Walmart's in a better position for you know, the speed shipping. They got locations everywhere. They don't got locations in 5 areas. They got locations, like throw a dart and you have a Walmart within a half-mile radius of your home.
Yeah. And especially, I mean, with the food department in Walmart, are they going to be able to actually ship food? I know they are making some competitive products to some of those food delivery companies as well. It's a really good point, Matt. Obviously, Amazon is the leader in shipping and selling online. UPS, by the way, one of these shippers that they have used a little bit in the past. I know they're moving away from it, but UPS was upgraded to a buy at Deutsche Bank. I can't imagine.
Okay, that's a joke. That's a joke. And Deutsche Bank's a joke. They're the worst bank in the world, Deutsche Bank is. And they upgraded UPS. Are you kidding me?
They did. I mean, the dividend down here, maybe multi-year support.
If the economy is strong, UPS doesn't have to be.
Now, I'm going to throw out a conspiracy theory.
Uh-oh.
Somebody paid them to upgrade them?
No, because I've seen things in analyst ratings over the last 48 hours that I have never seen before in the way that they're doing them. Throw out a conspiracy theory. Now, it's widely known that Wall Street does not want Bernie Sanders in the White House, right? So they are doing everything they can in their part to prop up stocks through bad analyst ratings.
Bernie Bros ammunition.
You know, they're doing everything they can to prop up stocks to help create market stability. I saw Wells Fargo upgrade large cap stocks as a whole.
The Bernie Bros already think that there's a massive conspiracy of the Democratic Party not wanting to support a non-Democrat.
Now, so they are making a conscious effort of let's get out as much positive bullish propaganda to create stability that we possibly can right now.
You know what it reminds me of, Mark, is when the S&P and Moody's were refusing to grade bonds, and they kept
exactly right.
When the bond market was literally dying in 08, they kept AAA ratings on that, and it came out that they basically, this was completely unethical.
Okay, here's conspiracy number 2. These analysts and these companies are upgrading everything to these absolutely, like, in the face of stupidity levels, because they're trying to get their friends their money out of the market, because they all know it's going to crash here in a little bit.
Hey, Tim, whenever Mark goes tinfoil hat, and I do agree with some of what Mark's saying, I need an Alex Jones.
Let me think of a good line from Alex Jones. I'll give you one on the outro. There's no doubt about it. Let me think of a good one. Because yeah, I'm with you. It does sound a little Alex Jones like, but by the way, I think there's logic to this.
There is logic. The S&P and Moody's were refusing to downgrade bonds, and it came out, and it was known that there was a wink, nod with the Wall Street institutions who were trying to dump their bonds to the open market so they didn't take massive loss.
Because what these companies are doing, these analysts right now, and the propaganda they're giving, because that's the only way it could be labeled right now.
We've seen across the board upgrades in the last week, we've seen more upgrades in the last week than we've seen in the first 5 weeks of the year.
Okay. Is that there is a conspiracy or something going on to either help for the election, but the second one makes a lot more sense to me. It's so certain
tinfoil hat.
See, what you guys don't understand here is that the number one donor of all money to corporate, and from corporate to, I don't got it here today, guys. I got to think of a line here from Alex Jones, or to political campaigns. Let me think of one. I'll get you one on the outro, Matt. I promise you. I'll get you one on the outro.
Joy in my life than Tim's Alex Jones impression.
You like my Alex Jones? There's no doubt.
But whatever the reasons are, because one could only speculate. Obviously, ignore this stupidity, because it's just outright ridiculously stupid.
What, upgrading UPS in a straight downtrend?
It's not just
in the face of lowering consumer confidence and lowering spending, and the worst PMI number in China.
Private competition through Amazon and whatnot. It makes no sense to upgrade UPS.
Yeah, no, I'm with you. I'm with you.
But again, it was Deutsche Bank, and Deutsche Bank doesn't make a lot of sense.
Yeah.
And just to remind you, Deutsche Bank, this is what your stock has been doing over the last 5-6 years. Get out of here, Deutsche.
I have no idea how this company's still in business. Yeah. Target actually missed their earnings just a little bit. Interesting big box retailer, one that we track quite a bit. Down near the 200 period moving average, Matt. They had some mixed numbers from what I read. What was your reaction to Target's earnings?
Target's earnings $EPS numbers came in at $1.69 on their EPS. The expectation was $1.66. So a slight beat on EPS numbers, a slight miss on revenue numbers at 23.4 billion versus the 23.5 billion expectation. The problem wasn't in the raw numbers. The problem, in my opinion, was in their revenue growth year over year. And that was only at 1.8% year over year. And guidance basically was reaffirmed, came in line. So a very neutral, lukewarm, maybe slightly good, maybe slightly bad. There's not a bullish or a bearish catalyst based on their earnings numbers, in my opinion.
Big picture, there's kind of a head and shoulders developing there, guys. Obviously, lower low, lower high on the daily. It's holding the 200. Definition of mixed time frame analysis, in my opinion. Long term, kind of.
That's an ugly chart.
Break 100. You've got a pocket.
Break 100. You're at 90 in fairly quick order.
Right, quick and in a hurry.
New York Times.
What do we always say? If it breaks above 90, it goes to 100 all the time, right? If it goes under 100, it goes to 90. Now, obviously, that's not a true statement, but it does have a feel to it.
Markets are breaking down on the intraday here, guys. We're down 2% on the day. S&P down to 30.27. We just broke below a 5-minute pivot. Mark, I think you had a headline from the New York Times.
It has to do with the testing. Now, and once again, like, all you can do in this situation is try to be as analytical as possible. The situation in Iran is the scariest one currently in the whole world for me, because the situation in Iran is horrible. BBC this morning broke leaked footage of mass graves being built and bodies piling up. And Iran has dramatically underreported their numbers. Wait
a second. Iran is not transparent?
Yes, exactly.
Okay.
Another dictatorial communist regime doesn't.
We have seen that the only thing that has, like in countries such as South Korea and China, which have done an amazing job of quarantine, maybe draconian, all that, but they've done an amazing job of stopping the spread of the virus through drastic measures, societal instant change. You know, that hasn't happened in Iran, and we're seeing the effects of the coronavirus potentially ravaging the country. Almost 10% of the parliament has the coronavirus. This leaked footage is very concerning. And then I see something out of the New York Times that says, you know, the White House promised 1 million testing kits by the end of the week.
Mark, the CDC literally just came out and said they only have about 10% of what they need.
Yeah, they're going to fall about 925,000 short of that.
Mm-hmm.
You know,
guys, we've cut the budget of the CDC dramatically.
Like outside, what I'm about to say is outside stock market analysis. As a citizen of a country, I'm an American. I want to know how bad this situation is so that I can make prudent measures.
Not going to get the information.
They do not want you to know, but the problem is we live in a new modern world, and it's going to be harder to hold that information, quite frankly. Cell phone footage, cameras, coverage.
What you're going to get, Tim, and this is the problem, instead of getting transparency out of our United States government, which is for the people, built by the people, right? Instead of getting transparency out of the U.S. government, you're going to get hysteria, propaganda, speculation on social media that won't be real, but it will lead to more uncertainty when you could have certainty just by being transparent in the numbers.
You know, I bag on Zero Hedge all the time.
Oh, Zero Hedge is
Zero Hedge is right now the best news source for now. Granted, you have to wade through if you can't believe, because you have some real lunatics on there. But right now, it is the best source of actual news and information. That is a sad state of affairs. That is a sad state of affairs.
Come on, Jack. Free Zero Hedge.
Like,
they're great in these
environments. We need to know, because we don't want to be in a situation like Iran. We want to be in a situation like South Korea. Low deaths, containment, testing, quarantine. Because if you're walking around with the coronavirus, most Americans, most human beings are good people. They'll self-quarantine. I
love when Mark gets close to the camera, like he gets really passionate.
But like, that's the situation. If the coronavirus is as bad as it has been in some places, and listen, it appears that it is, we want to be South Korea. We don't want to be Iran. And right now, if we don't know the extent of the problem, we are a lot closer to heading down the Iran track.
If we don't know the extent of the problem, it just leads to more speculation and more uncertainty. That's all it leads to. People can deal with truth. They can.
They always can.
They can. The markets can deal with truth. Wall Street can deal with truth. People deserve the truth so that they can take the proper steps to protect themselves and their families.
That consolidation range was so pretty while it lasted.
I said, I'm just going to keep talking, because I said it might be at 3,000 before we get done talking. So that's only 14 points away.
Dude, you know, here's the thing. And
again, it's nothing like an emergency rate cut to give the market a great confidence.
What will the headline be tonight if this thing breaks 3,000? I mean, for a trader out there, guys, you're trusting your eyes right now. You're seeing it. We're seeing it. Anybody who's trained is seeing it. We took off on this 1 hour, like instant move out of the Fed. It did not hold it instantly. It backfilled. I can't imagine anybody with money in the market has confidence in this market right now. And if you break below intraday and there's nothing down here.
Because here's the thing, Tim, when you get reports out of Iran, what's happening, when you see escalation, the Louvre is now closed. Can't go to the Louvre. When you see societal change.
Even Wall Street doesn't really track what's happening in Iran, though. Like this, to me, has everything to do with the Fed and their emergency rate cut. And it's like you're playing a poker game. That's their tell. When they do these types of radical monetary shifts, it creates significant uncertainty, because the Fed is tipping their hand. They will come out and they will say all the right things. It was in February of 2008, guys. February of 2008, 1 month before Bear Stearns went belly up, 4 months before Lehman Brothers went belly up, 5 months before we had massive bailouts from both a public and a private entity perspective, zero interest rate policy, and a year before a massive quantitative easing program, when Chairman Bernanke got up in front of Congress and he stated that the risk to the subprime market is over, that the risk to the automobile sector is significantly decreasing. They don't tell the truth. They tell their buddies on Wall Street what the truth is so that they can get out in front of the American consumer, because the only thing they care about is the cold hard cash of saving their money. They don't give 2 cents about you, me, or anybody watching this here today. Their policy is determined for Wall Street and corporations in the massive corporate socialism that they've done, and it is an absolute crime. It's unethical, it's immoral, but we need to wake up to that problem.
Are you saying that we're going to have to rename the award one day?
Recession is coming, or they would not lower the interest rate in an emergency response.
Matt, are you saying that one day we're going to have to rename the Bernanke Award on the Trading Justice podcast the Pal?
Pal's a coward. Pal's an absolute coward, because
I like the Bernanke. The Bernanke has a good name to it. The Pal is
a coward too. I don't care that, like, there's people that celebrate Bernanke. All he did is pump in money into the market. It was the easiest solution ever. Okay, let's bail out everybody. Let's not actually cure the problem. Let's just kick the can down to the next generation. That's all Chairman Bernanke did.
I got 2 questions.
And he's a coward. And Jay Powell's even worse than that, because Bernanke is a corporate socialist. Bernanke is a liberal. Jay Powell is a capitalist who is a hawk in his heart, and he is a coward because he capitulates to Wall Street in the face of any volatility, and he does not represent the American people.
Dude, that's better than any Alex Jones I could have done.
Hey, listen, Tim, I got a question for you, and I got a question for Matt. Tim, my question to you. You referenced yesterday on the halftime report the average investor, how you were talking to a few people, and they're like, hey, buy the bet. I don't know if you did in the halftime report in the pre-production, but you said something like, hey, there's a lot of people out there that are just like ignorant, and they're just like, buy the bounce because it's Trump's economy and you always buy it out. And, you know, this general thing. What happens to the psyche of those individuals if this thing craters in the next couple of days?
Well, the emotions right now are very high for every segment of the quadrant. I think that becoming a good investor, by the way, you have to wrap your head around what other people are interpreting in the market. Those buy the dip type of swing trader, position traders, they're in pain right now, Mark, in many ways. I'm sure they got stuck on positions last week. They were looking at this rally and relief as something maybe to get them out of a position. Maybe some of them did.
Well,
I mean, if you're...
Yeah, but that's only for people that actually trade at real brokers, not at Robinhood.
Not Robinhood, by the way. And by this Chris Couch had a good comment.
Psyche?
Their psyche is they are looking at this probably as a capitulation moment. If this sells down, they will lose confidence in the market. They will want to go into cash.
Matt, my question for you
is, if it doesn't work, what's the Fed's response?
Well, and my
1% interest rate.
And Matt, my question for you is: you're Jerome Powell or you're Donald Trump or you're one of these individuals at the top of the food chain, and let's say, all right, interest rate comes in and the market not only doesn't respond favorably, but sells off dramatically. What's going through their heads?
Oh, Trump is going to blast Powell on Twitter saying he hasn't done enough. That's what.
Well, he has been.
That's what Trump's response is going to be.
It's already happened. He did that like within 30 seconds after the announcement. Trump tweeted that he didn't cut it off.
Okay. It is never going to be good enough. He's a debt guy. He was a debt guy in his corporations. He was a debt guy in his private life, and he's a debt guy in the U.S. as president.
All right. So what do you want to be done next? So you're Powell, you're Trump. You want the market. What's your next move if an interest rate cut doesn't work?
You only have so many shots in that 6-shooter. Okay, and they already fired 4 of them. So you got 2 shots left before you're at 0 interest rates. 2, and at 0 interest rates, that's not going to cure this problem. It's not if we go through a recession. 0 interest rates will not cure this problem. The next step is negative interest rates. That's the next step. And when that doesn't cure the problem, because money doesn't cure a money problem, and debt does not cure a debt problem, the next one is more further quantitative easing. And guys, it's like a drug addict. You cannot do to maintain that same high. You got to do more drugs in the future.
Yep.
So
holy cow, gold could go to no limits if that happens.
$100 billion to 4.5 trillion. You're going to have a balance sheet that expands from 4.5 trillion to 9 trillion. That's what you're going to have. That's what they're going to do because they don't have any other choice at this point. What Powell should have done is wean the market off the nipple of monetary policy. That's what he should have done. Wean them off it so that he has more ammunition. Even this coward Jay Powell was literally just 4 weeks ago criticizing the United States government for basically overstimulating a market at the top of the market. He was criticizing the tax plan is what he was doing. And now just 3-4 weeks later, he's doing the exact same thing. Again, he's a coward. He cowers in the face of volatility the same way a 30-year-old money manager who's never seen a recession.
This is nowhere near over here, guys. If you're out there and watching our show right now, obviously, I think anybody knows that if you've got, some perspective on the markets, I think the best advice we can give anybody is the same advice we've been given for a month and a half here. Number one, trade what you see, trust your eyes, avoid risk, caution, balance in your portfolio. I mean, Mark, these are the messages we've been delivering. It's exactly where my head is right now. And I'm thinking about all of the investors out there. There's several things. And I've got a couple of questions for you now, Mark, because this is just too important to let go. If you're out there and you feel stuck in long-term positions because you've got 401k, mutual funds, long-term holdings, you've held ExxonMobil for 25 years or whatever it is, what perspective and what direction should that kind of person start moving towards?
They should invite a time travel machine and go back 2 and 3 weeks and listen to the Trading Justice podcast and to the halftime report.
Yeah.
And I say that like obviously sarcastically, but like preemptive best action is not taken in the height of something. Trying to determine analytical moves on what price is going to do the next week, you're dealing in the world of probability. You're dealing in the world of narratives and theoretical work. Well, if the market, because you can't ascertain how entire market participants are going to behave. And so it becomes very, very difficult to make decisions after the fact, after volatility spikes, after there's been big sell-offs. So you're this long-term investor listening to us for the first time. My best advice to you is seriously, and this is not a sales, but we haven't did a sales pitch one time this show. We're trying to give as much information as possible. This is not the last crisis mankind is ever going to face. This is not the last period of volatility. The crisis, the world is not going to end on the coronavirus. Making responsible decisions moving forward, other than knowing what's going to do today, what's it going to do tomorrow, that is really, really, really difficult to try to give advice to individuals.
I also don't think long-term investors should capitulate over a short-term volatile moment.
Yeah, I mean that's part of what I'm saying is like
have some perspective, guys. The market's up 450% in the last 10 years.
What we do well at
off the highs.
What we do well at Tackle Trading is try to provide frameworks for when things are a little out of whack and insurance cheap, and yet there's still a lot of risk. And how many times Matt said the market is not pricing in this risk for 2.5 weeks heading into last week's sell-off.
Pricing in the risk, by the way.
And so there's things we do well. Nobody knows where the coronavirus is going to go. And even if they know that it could get bad, you don't know what day that's going to coincide with Fed action or government action that helps create short-term rallies. So because you're in this explosive news environment, it is impossible to predict the order in which news occurs in a given week.
My question is, if you're gonna close out your long-term investments, at what point are you going to get back in?
Yeah.
Because I mean, one of the sad realities of what happened in 2008, guys, is once the consumer base did wake up to what was happening, they didn't wake up until it got into the headlines. And they got into the headlines when Lehman Brothers collapsed. That was September of 2008. The market was already down 40%, guys.
I'm going to read you a text.
Let me finish my point real quick, Mark. The market was already down 40% and they capitulated. And they only started getting back in, Tim, in the last couple of years. So again, if you're gonna go to cash, I understand that, especially if just in the short term to see how this coronavirus does impact from an economic perspective. I understand that, but again, you got to have a game plan when you're going to get back in because cash is trash.
Yeah.
Matt, there's been two things we've done in the last 14 months at Tackle Trading where we were pounding the table from a theoretical model standpoint. One was at the start of 2019 when Powell did the pivot. So at the start of 2019, previously in 2018, the Fed had been very hawkish. And we were screaming in those initial months, like, listen, this is a huge narrative change. This is a huge sentiment change. We did specials at night on this topic, showing that, listen, when you have this shift in such a huge driver of the market, and it led to a V-shaped recovery.
Jim will remember, I called the top in the Russell 2000. You know, I said, this is going down.
And then a few weeks ago, we were talking like, this is crazy, people. You have this huge explosive news story that is developing, that is ongoing, that is not getting better, and yet the market's blissfully unaware of it.
Again,
pinpointing whether the IMF comes out tomorrow or coronavirus news comes out tomorrow, that requires a crystal ball. But from a theoretical framework, what I'm hearing from you, Matt, and what I maintain, there's a lot of bad stuff coming down the pipeline.
There's things economically come down the pipeline that we don't know yet.
Sure.
Like
there's
uncertainty. An impact on supply chain. There's an impact on earnings. There's the
and like I said, Tim, to kind of go back to your question, what should those long-term investors do? I understand the desire to go to cash in this environment because it's much better than taking the risk of a market downturn. And I think it's perfectly okay if we do see a V-shaped recovery to miss out on some of that just to cover the risk. Would you guys agree with that?
Yeah, I would 100%.
I've said that for 5 weeks. I'm not afraid of missing out.
I think we should all be willing to miss out on some of the recovery until we see not the market recover. I go back to when we were talking about it 2 weeks ago, Mark. What would you need to have great confidence in the market again?
And what did I say?
None of us said monetary policy.
No, it had nothing to do with monetary policy. You have to see that the worst of the coronavirus.
You got to see the expansion slow.
And there is an addition to that now. You have to see the worst of the coronavirus, and you also have to understand from a long-term investing, once again, this is not day trading, this is not short-term swing trading. You also have to start to understand how bad the supply chain disruption actually is.
That's the biggest question. Okay. We don't know how bad it's going to get in the US from coronavirus. We still, again, testing is a concern, but I think there's 106 cases so far. But hold on. There's 106 cases so far. Okay. We don't know how bad it's going to get. We might look back 6 months from now and say, again, scary situation, but the worst didn't come to happen from a corona perspective. But even if the best case scenario plays out in the United States from the virus spreading, that does not fix the supply problem coming out of China.
It doesn't even. If there are serious structural problems coming out of China, Asia, let's call it what it is. If there are serious supply chain disruptions and a change in worker behavior and production capability coming out, even if the coronavirus isn't bad, you now have this additional problem of how bad is it in Asia to disrupt this entire supply chain? And what are companies not doing? They're removing guidance, they're lowering, but they're not telling you how bad it is.
Yeah.
Well, Mark, but when they remove guidance, that should tell you.
Well, yes.
Like companies only remove guidance, not if they're thinking something's going to be positive, right? It's like when the Fed has an emergency cut. They're doing that because they see something coming down the road. Remember, the economy, guys, the economy is slow. It's like the Titanic. It takes a lot to get it to move in one direction or the other. And so they see something coming down the road 6 months from now, a year from now. They're not cutting rates because they see something today. They're cutting rates because they see something in China that's going to impact the global supply, the global supply problem. And they're trying to be preemptive in doing that.
There's two things that rate cuts cannot do. You hear increasing jokes, they cannot cure a virus. And two, they can't get workers to go back to China to create the parts.
Can't force us to go get on a plane and go on a vacation.
Even at CNBC the other day, they said, you can't make me go to a concert. You know,
but you can't get people to go to China to produce the things. Now, maybe the Chinese government's like, hey, rate cuts might not do that, but a gun can do that.
Speaking of arena-based optics, I heard that March Madness might not allow people to come to the games, Matt. Well, could you imagine what that does in psychology?
All of these sports leagues are discussing contingency plans in the case of the spread. They're not going to shut that down with the numbers that we're seeing today. But if we see the expansion like we saw in South Korea, Iran, Italy, and obviously China, you're going to start to see disruptions in public events. We're already seeing people shut down conferences.
And wouldn't it be nice to know how many cases we actually had in the United States so that we can make logical decisions on this?
They don't trust
the coronavirus is going to literally drive Mark into his bunker.
They don't trust the public, Mark. Same reason why you don't trust the public. You know, they look at the statistics. People don't understand it. They're worried about mass hysteria. They don't. I don't agree with it, but that's where their head's at. Markets are breaking down right now. I'm going to answer my own question as well, by the way. And I love the answers. And I love this discussion here today, guys. Number one, education. And that is not a pitch. That is a reality.
It's a reality.
It is a reality. In a market crisis, as an investor that you self-direct your funds, you should have the minimum following skill sets: the ability to exit a position, to add a put option, to hedge, and to balance your portfolio, Matt. Those are simple things. Even if you have,
if there's one thing that I would suggest people understand, it's the difference between growth and value from an investing perspective.
You know what's funny, guys? When I first started at Tackle Trading, I didn't know what you guys were doing. I knew you guys were like started Tackle Trading and you were doing trading. I didn't know the thing, and so I came on board. And one of the first things I did is I did a breakdown of every article you guys had ever published on Tackle Trading in order to understand what you guys were teaching. You know, because there's lots of different ways to teach trading, investing, right? And I was like, holy cow. Because I hadn't talked to you guys about investing or trading in years and years and years and years. Yeah. I was like, holy cow, like 18% of your articles are on insurance.
Yeah.
Like you had like almost 20%.
About 40% of our content was on covered calls.
Yeah. Yeah. Like you guys were teaching these basic conservative money managed techniques. And I was like, wow, you know? So like these concepts that Matt and Tim are they go back to the origins of Tackle Trading.
Yeah.
Our philosophy is very simple. We're a community of like-minded investors, all helping each other navigate the marketplace. But you know, I take great pride in our coaches doing it the right way. I take great pride in our content doing it the right way. And you know, I know that we could go get more subscriptions, more revenue, if you know we went out there like other companies like Tackle and just said, you know, let's go buy out of the money call options on every stock and get rich.
Let's try to get rich. Let's try to get rich.
That's not the truth. Trading is difficult.
Yeah.
That's the truth. Investing can be hard. That's the truth. And we need to, I say this to Tim all the time. We have to have honest conversations with our community because I believe our community is highly intelligent. I believe our community is motivated to do the right things. And they can handle the truth.
Listen, our community, only 11% believe that coronavirus beer can get from the beer.
That's high.
You know, so only 11. We're way lower than the 38% normal.
And Maria makes a really good point.
What I hope is that over the last 3 weeks, very similar to what happened in the fourth quarter of 2018, is that you know our community took action to secure, to hedge, to go to cash, to maybe rotate into some defensive. I hope our community added gold to, you know, offset some of this risk. And you know what, regardless of what the market does, whether we're in front of something, you know, some existential crisis, similar to what we went through 10, 12 years ago, or similar to what we went through 20 years ago, we're going to be here every day and we're going to help you navigate it. And we're going to help you analyze it. And we're going to have honest conversations in that. And sometimes we're going to be right. And sometimes we're going to be wrong. Nobody's always right. But at the end of the day, you know, even though trading and investing can be difficult, it's also amazing.
100%. I love it. I mean, quite frankly, I love the volatility of the markets when it does start moving up.
Let's be honest. Like, what chance do you have of growing your money if it's not through investing of some kind or another? You're going to go put it in the bank and get 0% on your money. What does a savings account pay these days? What is a savings account going to pay the rest of your life with Fed policy the way it is? It's not going to pay.
Whatever it is, Mark, it's not going to offset inflation. I can tell you that.
Yeah. I mean, so you literally can sit there and lose money other than the money that you make and literally save, or you can find ways. Now, maybe for trading and investing, it's not for you. Maybe that is not your wheelhouse. But don't
find something.
Find something, because
Gotta find something.
Sitting on money and bonds and that, you ain't gonna get to a place where you
like, and if you think the savers got hit in the last 10 years, just wait till the
war. Yeah, I mean, once again, predicting what news is going to break tomorrow is difficult. Predicting the saving is no longer a vehicle. That's an easy one.
Yeah, and investing in the financial assets is one way. Investing in commodities is another way. Real estate, land, business. There's a lot of ways to get your money working, and we're certainly not going to be the ones to say this is the only way. It's just the way we choose.
And as we wrap up, if you are new to tackle trading and heard us, we've had a lot of people for the first time watching the halftime report over the last few days. We are not a buy and hold, teach you how to do that. Mm-hmm. We have a lot more innovative and a different approach to any of that. Come check us out. Email me at team@tackle-trading. Get a 15-day trial. We have a coaches show tonight. We have a coaches show.
And what I would suggest is, you start by, watching the 7-step guide to trading, which is a free product we have. And Cody, if you can find the link for all of our new members on YouTube, that they can download that free 7 steps to trading and investing guide that we put out a couple years ago. Did an update last year. It's about a 2-hour, course that, we basically give away for free. And then I would start with, getting into the step system and watching the step system. And I'd also, attend the nightly coaches shows, right?
If we talk for a couple more minutes, we might hit.
Dude, I keep looking at it.
I'm telling you, I'm filibustering here. That's all that's happening.
I know that's what you want to do.
I mean, this isn't like NBC where we have to go off air at some point. We could talk as long as we chose to. Obviously, we are going to wrap it at some point, but we might hit 3,000 before we finish this.
MSNBC, Chris Matthews all of a sudden went off the air last night.
Oh, ding,
ding. I'm going to miss Chris Matthews.
Oh, he got fired?
Basically,
it was mutual.
He stepped down.
I don't believe it was mutual.
No, he
made some huge apology last week. So he
had some gaffes over the last year or so. I mean, comparing Bernie Sanders to the Nazi 1932.
Let's be honest.
I was going to say MSNBC doesn't like it when he says socialism's stupid. It doesn't work.
When you're a 74-year-old, I mean, that's the thing is that like Matthews would say some of it. I mean, he leaned liberal. There's no doubt about that. But he'd call it how he saw it. And when you get to be a 74-year-old man, you're probably not going to give two craps what anyone else thinks or says.
These media stations are going the wrong direction in general.
Yeah,
I mean, independent voices like Shepard Smith on Fox and Chris Matthews on. I mean,
Listen, if you don't toe the company line, whether it's Fox News or CNN or MSNBC, you're no longer there.
I get it.
And that's too bad. That's bad for all of us.
Too bad.
All right, guys, we're going to be back here each and every day and break down this market information.
One last thing real quick, Tim.
Mm-hmm.
AMD, Advanced Micro Devices, also got an upgrade here today as well.
Yeah, AMD. That is an ugly chart. That is an ugly chart.
And my next prediction is that the analysts come up with the super duper upgrade because they can't upgrade anymore. So now they're going to do, hey, we're going to do super duper upgrades.
Yeah. Matt, we did drop our podcast yesterday, and we were talking a little bit about the updates here and some of this conversation. If you're a listener to our podcast, make sure you get the download each and every day. But Matt, I enjoyed that one and kind of just explain how people can find the podcast.
Well, tradingjustice.com is the best way. And you can also, while you're over there, you can get our free newsletter that we put out on a monthly basis. That's a really good newsletter that, Coach Christian, Coach Mark put together. Christian has done a lot of it. You also sign up for that 15-day free trial to tackle at Trading Justice as well. But the podcast is on, anywhere anybody get podcasts, iTunes, Stitcher, Spotify, any app that has podcasts. And you know what? I think I'm a little sick of the coronavirus. I am, but I know we also have to make sure that we're talking about it and updating our community on it because it is the number one economic situation. And it's the number one, thing that's happening out there right now. So we discussed obviously the corona scare, but we discussed a lot of things in our podcast. So definitely want to listen to that one. Also, Pete Thomas from last week was an excellent interview. Really enjoyed that one as well. So definitely, give the Trading Justice podcast a listen. And if you like it, go over to iTunes, give us a nice little 5-star review. And if you don't like it, still 5-star review.
Nothing would make me happier if in a couple of months we were having conversations about just new tech ideas and 5G and all that kind of stuff.
Oh,
nobody wants these conversations, guys.
It reminds me of the trade war, and all the time we're like, can we just get to an earnings season?
Yeah.
Like, just give us the earnings season. Just give us something else. But obviously, when it's in the social conscious like this, and it has the ability to have upheaval from both a personal and an economic perspective, you have to discuss it.
Yeah. All right. Great job, guys. We are done here for today. We'll be back tomorrow. Make sure you like, you share, you subscribe, you click the bell, and come and join us each and every day. Before you bounce out, give me a hashtag Team Tackle in the chat, because that's what we are. We got a community here. We are very proud of it. We'll see you guys tomorrow.